What if all the trash we throw away isn't really an endpoint, but a gold mine? Today, we're going to dive into Gravita India, a company that has absolutely mastered the art of turning waste into wealth. And in the process, they're building a much greener planet.
I mean, just look at this. Our planet is kind of drowning in waste, creating mountains just like this one. And this isn't just a pile of old tires. It's a powerful symbol of our whole linear take-make-waste economy. It really feels like a dead end, a problem that's almost too big to solve.
But hang on, what if we're looking at this all wrong? What if that massive pile of waste isn't an endpoint, but actually a new beginning? A hidden resource just waiting to be unlocked? Well, that's the exact question that drives the company we're looking at today. The answer is right there in their core mission, to transform waste into value. And this isn't just about tidying up our planet. It's about fundamentally redesigning our economy into a circular system, where, ideally, nothing is wasted.
So, who's making all this happen? Gravita India. They've really positioned themselves as a global leader in taking all sorts of discarded materials and giving them a second life as high-value industrial products.
Now, this slide makes it so real. On the left, you see the problem, that messy pile of waste tires. But on the right, you see the solution, high-quality rubber granules, all ready to be used in new products. It's a tangible transformation right there in front of you. And check this out, because this is their biggest business segment by far. They take used lead-acid batteries, the kind most of us have in our cars, and through a really sophisticated recycling process, they turn them into these pure lead ingots. Get this, this one activity makes up over 88% of their revenue. It's huge.
But lead is really just the beginning. Their expertise covers a whole portfolio of materials that are absolutely vital to our modern world. We're talking lightweight aluminum for cars, versatile plastic granules, and durable rubber products. They're building a truly diversified circular economy.
So just how big is this operation? I mean, we're not talking about a local recycling plant here. This is a truly global enterprise, and the scale is, it's pretty staggering. Their reach extends to over 34 countries all around the world. From Asia to Africa to the Americas, they've built this incredible network that sources waste and delivers value on a truly global scale. And that translates to a customer base of over 340 businesses globally. Now, these aren't just one-off sales. These are companies that actually rely on Gravitex for a steady supply of high-quality, sustainable materials for their own manufacturing. This whole operation is powered by 12 state-of-the-art recycling plants spread across 3 continents. Each one of these facilities is a high-tech hub designed for maximum efficiency and, of course, minimal environmental impact. And the real engine behind it all? It's the people, a dedicated global team of over 3,000, from engineers to plant workers, all committed to this mission of creating a circular economy. This shot gives you a real sense of the industrial scale we're talking about. Those numbers aren't just abstract figures. They represent a massive, coordinated effort powered by some serious infrastructure and a really dedicated global team. Okay, so a company can do all of this, but it raises an important question. Are they doing it responsibly? And that brings us to their commitment to sustainability, which seems to be woven into every single part of their operations. Now, this statement from their report, it's not just corporate jargon. By publicly declaring that sustainability and transparency are paramount, they're setting a really high bar for themselves and signaling to the whole market that their ethical standards are just as important as their production targets. So what's driving the demand for this kind of leadership? Well, a key factor is a policy called Extended Producer Responsibility, or EPR. Essentially, governments are now making manufacturers responsible for their products even after they're sold. This creates a huge incentive for formal, transparent recycling, and that's exactly where Gravitex sells. And their commitment isn't just talk. Look at these hard targets. They're actively increasing gender diversity, they have a clear roadmap to net zero emissions, and they're aiming for zero waste to landfill in their Indian operations by 2040. These are specific, measurable goals. And this commitment goes way beyond just the big environmental targets. Think about this. All their production sites recycle 100% of their water, and every single employee is covered by health insurance. This really shows that their definition of sustainability includes the well-being of their people and their local communities. Okay, this all sounds great, but does this green model actually work as a business? Can a company that prioritizes the planet and its people also be profitable? Let's look at the financials. The numbers here are pretty impressive. Their consolidated revenue jumped by over 20% in just a single year, growing from roughly 3,100 crores to nearly 3,900 crores. That's not just growth, that's a powerful statement about the profitability of their model. And this isn't a recent fluke. They have a 14-year history of paying dividends to their shareholders, and they finished the last fiscal year in a net debt-free position. This points to a very stable, well-managed, and financially sound company.
This chart brilliantly illustrates their business structure. You can see lead is the powerhouse, making up 88% of their revenue. But you can also see strategic diversification into other high-demand materials, like aluminum and plastics, which positions them for future growth across the entire recycling sector.
Which brings us to our final thought. The story of Gravita India really challenges a long-held belief, doesn't it? It suggests that in the 21st century, sustainability isn't a cost center, it's a competitive advantage. It begs the question, can a company become profitable because it's sustainable, not in spite of it? Based on this explainer, the answer seems to be a resounding yes.